neglecting your credit is not going to move you forward in your hopes and dreams for financial freedom.
If your credit isn't in good shape, over the course of your lifetime, it could actually cost you hundreds of thousands of dollars. If you're suspicious that your credit isn't doing well and you aren't making any strides to make it better and year over year unfolds, a lender is going to judge you against the character as a person.
Divorce can be emotionally and financially overwhelming. That's why I'm teaming up with Sunny Wishart, president and founder of a la carte Financial and a certified financial planner. We will show you how to understand all things money without feeling ashamed, overwhelmed, embarrassed. You will learn more, ask questions. No question is a dumb question. Welcome to Money with Sunny. Let's get into it.
Welcome to Money with Sunny. My name's Wendy Rovers. I'm a certified divorce coach. Welcome, Sunny.
Morning, Wendy.
Sunny is an advice-only financial planner at a la carte Financial, and together we want to share with you all that we know about money, creating financial independence, growing your wealth, and being financially free. Today, we're going to talk to you about neglecting credit. And before we hopped on this chat today, Sunny was talking to me about the 3 C's. So neglecting your credit, the big C, and then the 3 C's is what we're going to share with you today. Sunny, what is important? What do we need to think about? Why is neglecting credit important?
Mm-hmm. So this one, I thought about this a lot. It took me back to my lending days. So as a financial planner, I'm always talking to people about watching their credit scores, making sure their reports are correct, there's no fraudulent activities and things like that. But then there's the flip side of the coin where if your credit is a little bit bruised, or if you're suspicious something's going on and you've got your head in the sand and you're doing nothing about it, that's a different can of worms than just having healthy credit. So, and keeping an eye on it. And what ends up happening is if your credit isn't in good shape, over the course of your lifetime, it could actually cost you hundreds of thousands of dollars because you are no longer an ideal borrower to a lender. You're down, depending on where your credit's at, you get knocked down pegs, and they're going to lend to you interest rates according to your credit. So, and that can be costly when it comes to mortgages, like biggest borrowing expense we're going to have, very costly. So I was thinking back and there was a couple of things that came to mind. So the 3 C's of credit, I haven't thought about this in a while. One is like collateral. So when you borrow to buy a car, they put a lien on your car. So they'll take your car if you can't make your payment. Or you borrow to buy a house, they put a lien on your home because they have an interest in your home. That's collateral. Um, so they're going to make sure if you have those things, or they don't lend as much if they don't have a lien on anything. The other one is capacity. So capacity means, can you afford to borrow? Okay, so they're going to look at that. And these are what the payments will be to borrow for whatever you're borrowing for. And the final thing they're going to look at, a lender, is your character, the 3rd C. And this is the C that got me hung up on neglecting your credit. Because if you neglect your credit, that it can be a sign of character. So when I was in doing mortgages, say, we would see that one person, they want to get a mortgage. They had a blip in their credit 2 years ago. I'd be like, "Ooh, you had some delinquencies 2 years ago. What happened?" And then they'd say, "Oh, that was my divorce." really struggling, and we were uncoupling all our finances and selling the marital home, and he didn't make the payments, or I had this in my name and he didn't pay it. It was his truck. Whatever the story, a lender understands that. They're like, oh, okay, but it was just a blip because you got back on track and you fix it. And we will overlook stuff like that. We will say that is true. We'll confirm that that is true. Um, and that was a blip in your history and it was only that year. And now you're all back. So you were good, then you weren't, then you're good again. So it's all about your character. And if you're suspicious that your credit isn't doing well and you aren't making any strides to make it better and year over year unfolds, a lender is going to judge you against the character as a person. You didn't decide to pull up your britches and make it right. So that's why I strongly recommend not only looking at it, but saying, what can I do to make this right? Um, and I do tell my tale. I went down that barrel during divorce. The payments were robbing Peter, paying Paul, begging for consolidation loans everywhere I went, trying to get one payment to fix everything, trying to get out of the house and thinking, well, maybe bankruptcy is it. And sometimes bankruptcy is a great option, sometimes it's not. And I just decided deep down that I can do this, I can fix this. So I had to, I towed the line, did okay. And then after about a year, pulled out my socks and said, it's time to get cracking on this and nail down on this and make it all right and pay all these people off.
Mm-hmm. 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 So okay, I guess a couple of things where if someone has never looked at their credit or this is something they've never considered, where do I go to check out what my credit score is? And maybe we can touch briefly on credit score, like
Mhm.
what's a good one, what's a bad one, and then ways to improve that. Um, let's start there.
Yeah, so there are the top two reporting agencies in Canada are Equifax. That's the number one used credit report agency, and TransUnion is the other used one. And they're not necessarily, one might be have something different than the other. So it's nice to check both if you can. And by checking, sometimes you can check your credit score. Your online banking platform might have it available for you. I know that Scotiabank allows you to check TransUnion right in their app. Just click, and it's going to show you your credit score. I personally use Borrowwell. It's online app and it sends you your credit score every month. I don't look every month. It's like the stock market, but you do want to lay eyes on it. So like a perfect and non-existent credit score is 900. No one has that. Then you're going down to like 600 or any like 600 below or pretty bad. I like Burwell has like a meter. Are you in the green or the yellow or the red? And it gives you some tips on how to read it. So it's not just looking at your score. It's then scrolling below and looking at your trade lines.
Mm-hmm.
So looking at each line that is on your report and making sure that they're correct. The lenders just send it whether you paid or not, basically. So you have revolving debt and installment debt. So revolving debt is an R, and it's like your credit card or your line of credit where you have a limit, and then you can just float all and underneath it. That's revolving, constantly cycling every month. And then you have installment debt where you have, I borrowed $450,000 to buy my house, and it's paid off on this date because I'm making fixed payments, or a car loan. Those are installment loans. That's an I. So you want to look on your trade lines and make sure that all those are reporting the payments paid on time if they were, or if there's a delinquency. And then they have delinquencies of 30 days, 60 days, 90 days. So if you're late by any of those, it'll be like I forget what they are, all the numbers now.
Mm-hmm.
But I know that a write-off, one that you haven't paid in forever, isn't like an R9. That is like a credit card you have a balance on and you completely ignored all the collection costs. That's an R9.
So when you
Uh,
go in and take a look at your credit report, you'll be able to read and see where you're at. And then how do you begin to make improvements on your credit score?
so the beauty of a credit score is you can get this running and fix ship shape quite quickly. All you have to do is just make good on your payments. So if you have a payment coming up, you've really got to pay attention to making that at least the minimum payment, right? So at least start making your minimum payment, and then that'll help. The other thing they do look at, and I mentioned, was capacity. So say you're making your minimum payment, but you have $80,000 of lines of credit at their limit. The credit agency has like some analytics, and that shows a capacity issue. You've borrowed, you spent more than you can make. So now you owe, you're all at your limit, which means you've lived beyond your means for too long.
Is that the same as utilization?
Yeah.
Yeah. Okay. So, and isn't it 30%? Is that that's kind of you could keep it under 30% type thing? Right. Okay. So, so keep an eye on it is important. And within a reasonable amount of time, you can improve your credit score. That's what I'm hearing. Am I missing anything?
No, I think you can, if you just look at it and make your payments, you can, I know if things are maxed out, something else we'll have to work on, but just keeping the payments on time, start there if you do have bruised credit.
Yeah. So neglecting your credit is not going to move you forward in your hopes and dreams for financial freedom. Get in there, take a look, go to TransUnion, Borrowell, Equifax. You can Credit Karma is another one. You just go somewhere and see what your credit score is now. It won't affect your credit score at all if you click on that every day, twice a day, once a month, once a year, makes no difference. What affects your credit score is when you're applying for credit and they click on it. Sometimes that can affect your credit score, but you can check it out anytime you want. It doesn't affect anything. Did I get that right?
Yeah, like Borrowell is not a hard hit. A hard hit is a lender.
Yep.
And those are okay. Hard hits. It's credit seeking they're watching for. If you're going across a whole bunch of lenders and they're all checking your credit, that's credit seeking. That's bad. But going to a dealership and getting financing where they're going to send your credit application out to like maybe 3 to 6 lenders. They're all checking at that one instance. That is not credit seeking. That is
Mm-hmm.
just getting a car.
Mm-hmm. Okay, great. I mean, I think we've covered most everything when it comes to neglecting your credit. Is there any final words, anything that you think is important for people who are just starting out, looking at their credit score, who have maybe understand their credit score? What's most important from your perspective, Sunny?
Don't bring up those balances. Keep the balances down. It's once they get up there, it is so hard to dig out. So if you can, keep that utilization down.
Okay, great. All right. Well, hope this has helped. Thanks for being here with us today. You've got this, and we will see you again next time.